I'm doing live recording on TradingView, posting it on YouTube as well. I did one yesterday, so I want to do that for the rest of the week, maybe next week if I have the energy. Yes, so you have a strategy. One of your strategy is working now. One of the trades, Euro US dollar. Can you see my screen? Have I shared? No, I haven't. Okay. How is your trading going anyway?
Yeah, it's I'm learning and I'm understanding what I'm doing. Well,
Good.
to the point that I'm at, which is all I can ask for now.
Awesome. You
Yeah.
know, I have to say this, Jordan. You are doing fantastically well. And I'm happy with what we've been able to achieve in terms of understanding the methodology. It's still early days. This is
Yeah.
your first time of actually using the Wave of Success. And this is just, I'll probably say, a very small part of what you're going to learn. There's still many more things you're going to learn. The idea is we have gone through the theories. We are now putting it into practice. And that's what you're doing with demo account. Okay. This video, this first session that we're doing this morning, I might post it on YouTube as well, just to let you know. I might post it live. Okay.
Yeah.
So this is your strategy. This is your template. Okay. This is the Euro US dollar. That will have been your entry. Okay. That's the reason I've done this for you in terms of your strategy is because I want you to be able to follow the rules, instructions. Okay. So let me hide the levels. Before I hide the level, you take a mental picture of it, follow the same methodology that we've done. This is your technical or mechanical approach. We have a bearish market. What makes a bearish market? The daily bar is red, boom. The trend line is red, boom. The wave structure is red. We can see we have a completed wave structure here, followed by a pullback. We do not have the 3 green. The reason we have incorporated the 3 green is because we want to be able to monitor any trade that is changing against the trend. In this case, we do not have a trend changing against the trend because we don't have 3 green. Okay, so we have seen the pullback. You can see that was a nice move down. Okay, that's the beginning of the downtrend all the way down here. And what we saw here is a reversal. We had a simple reversal here. This was a reversal. Then we know reversal does not mean the trend is changing. It just means there is a pullback or a discount, what we call the discounting mechanism. Then we have the first break after the reversal. That was the first break there. Let me put a line on it. That's the lower high that broke the first break. This is actually a good example for you, Jordan, because I'm going to explain something to you here. Okay, so that's the first break. We are not taking, for you, you will not take the first break. The reason you're not taking the first break is first break does not mean the price is going to capitulate. We want the second break to confirm that this thing is going to go down. Then we had the second break here. And that will have been your entry. In this case, you will not place your stop loss there. You will use this because the pullback of the second break, the pullback of the first break, sorry, after the price broke down first time, the pullback was higher than the first break high. Do you understand what I'm saying?
Yeah.
So in this case, you won't use this as a stop loss, your initial stop loss. You will actually use this one here, this higher high, this lower higher high. as your stop loss. So that will have been your stop loss there. And you will now monitor the trade. Okay, so this morning, the first thing we're going to learn is the Fibonacci, because I didn't teach you how to set the target. I just want you, your first job is to learn how to enter the trades. Your execution in terms of correct entry. But today we're going to be looking at how to set targets. Okay, that's the first part of this session. Session 2, we're going to be looking at the retracement methodology, which is something else that you've not learned before, because I'm just sipping my coffee. The second part of this session, we're going to be looking at the theory in terms of the retracement methodology. Why is it part of the WavesOfSuccess methodology? Why have I incorporated it into my strategies? So let's start, okay? On your terminal, on your platform, on your MT4 platform, this sign is Fibonacci, okay? This one here, yours will not look like this, okay? And probably you're going to share your video in a bit, your screen in a bit. I'm going to give you some numbers, okay? The way we've done this, there are key levels. You can see I've labeled them. I'm going to move it here. So when you have let me bring out the paint so I can explain this properly. So let's say for the example that we have a downtrend. So we can say this is 1, this is 2, this is 3, this is 4, and this is 5, okay? You know what this is. This is a downtrend. Why is it a downtrend? Definition of a downtrend is series of lower lows, lower highs, lower lows, lower highs. The series is more than 1, okay? You've learned this. More than 1 lower low, more than 1 lower high. That makes it a downtrend, okay? In terms of the WavesOfSuccess methodology, we've incorporated the waves to count the waves. And that means at 5, price is likely to give you a reversal, okay? That reversal is what we call the secondary trend, because the downtrend is the primary trend. The pullback against the trend like this is not a trend change. That is a reversal. All these key points here, 4, 2, they are what we call the last posted high, because they are key levels, okay? Price will likely come to one of those two to form a move. Okay, so what you do in terms of Fibonacci is we place the top of the Fibonacci at the highest point that started the downtrend and the lowest point before the reversal. Okay? Then what we do is we are looking for, there are several levels that we use. There's the deepest one we call the 76.4, which is the deepest reversal that is allowable. So 76.4% retracement. That means the price has retraced from here to here is 100%, okay? From the high to the low of the move is 100%. Then if price get to 76.4, we are expecting the T1, which I'm going to explain to you, okay? Just follow me now. Let me just sip my coffee. Then we have 61.8%. Before the 61.8%, we have 50%. Before 60%, 50%, sorry, we have two levels, which I normally use one of them. I use the 37.5, which is a Murray math level. It's very powerful level, 37.5. Okay. There are other levels that people use, like 23.6. I don't use that because I believe this one here, from experience, I believe the 37.5% is stronger than the 23.6 or even the 38.2. So I normally just use the 37, 50, 61.8, and 76.4. You see, in most cases, if price should trade above the 76.4, it will go back and break the high. The best area of reversal is here. That's why we call this sell zone when we are drawing from the high to the low, and buy zone when we are drawing from the low to the high. Okay?
Yeah.
I'm going to explain this even better. Okay, just follow me. So now we have targets below the price. Okay, the first target, which you call the T1, is the minus, because of the way I set the Fibonacci, minus 23.6%. This is what we call the target one. Then we also have second target. This is the minus 61.8% second target. So let's leave those two for now. I'm going to discuss more targets later. If the reversal, the pullback, stopped between the 61.8 or 50 or 37.5, our expected area of target is the second target. If the reversal gets to the deeper correction, which is the 76.4, our expected area of target is here, the T1. This T1 is very powerful because, you know, the banks, the algorithms, they use this area for a reversal. The example is very clear on the Canadian dollar Japanese yen. I did a video on it yesterday. We exited the trade. You can watch the video on my YouTube. We exited the trade at the T1 and the price reverse. So I'm going to show you that example now. Okay, so this one is going down nicely. Okay, let's actually draw, before we move forward, let's do the Euro US dollar first. Okay, let me just make this chart a little bit cleaner. So we have to, like I said, this is a downtrend. We place the Fibonacci at the beginning of the wave structure that created the reversal. So that's the high. Then we drag it all the way to the low. You see what I've done? So that is minimum. I didn't explain this to you, but this is the Murray level that I was talking about, 37.5. That is the 50%. That is the 61.8%. So based on what I've just explained, we would keep an eye on the first target, but expected level of target is the T2 here. Okay, so
yeah,
the example that I wanted to show you is the Canadian dollar Japanese yen. Let's look at the CAD yen that I traded yesterday. So, so this is the CAD yen. That was the trade yesterday. We had a downtrend here, lower low, lower low. Let's put the level on it. You can see the downtrend. Price retraced back to the last posted high here. this one here. So because if you count this internal wave, you have 0, 1, 2, 3, 4, 5. Price came here. We took the trade. Let's put the Fibonacci on it from high to low. Guess where the price retraced to? The deeper correction. Guess where the price stopped? The T1. Guess what happened? The price reversed from there. And this is where you are today. And we took the exit there. We didn't wait for the next candle. As soon as the candle closed, automatically the trade closed itself. And that was your winning trade. Okay? So the Fibonacci, I learned Fibonacci many years ago. What I did, I tested it, see what worked, what did not work. Then I refined the levels to my own liking, and that is what we use today, okay? And if you follow what I'm just sharing with you, with your methodology, you will be able to exit your trades at the right area using the Fibonacci, okay? So this will be your sell zone. Your sell zone is between the 61.8 all the way to the Murray level, okay? Guess where the price retraced into? That sell zone. You see how the Fibonacci is going to help you to tailor your entry properly. It's going to give you a good area of entry and a good area of exit, okay? So moving on. So we've done the T1 and T2. There are other levels below the T1 and T2, which I'm going to do now. I'm actually going to switch to the trading view chart without disturbing. Oops, I'm recording live and I don't want to disturb that. Guess what? I'm going to continue here because I don't want to disturb the recording. Once I change the frame of the trading view chart, it's going to stop automatically. So I don't want that to happen. Let's clean this up, okay?
Can you work out the T1 and T2 without that, or do you have to have that?
Without the Fibonacci.
Yeah.
You need it because that's going to help you. You don't need to work it out yourself, okay? I'm going to give you all the numbers and they will stay on your chart, okay? We will set your chart up, your MetaTrader 4 charts up, so that you don't have to work it out manually. It's there permanently, okay? Let me do the other one on the clean chart, okay? So what do we have here? I'm trying to find it. Oops, that's not a clean chart. That's not a clean chart. Sorry, let's use your template, but I'm just gonna remove the indicators. The reason I'm doing this is because I want you to see everything clearly. Okay, I think this is good. Awesome. So that's your Fibonacci, okay? There are other levels here. We call this one strong, extension 1, and GM4A. So if price, okay, should stop at T1, just follow me. You may need to watch this video over and over again as you always do, just to consolidate this. If price stop at T1 and pull back, and this pullback did not go all the way up, like the Cardian that I showed you, and the price starts to come back down, it will break. Oops, I was going to explain T1, not T2. So we have this. Let's draw this properly, okay? That's your T1. It pulled back. It did not go back above the starting point. It gave you maybe a pullback into that zone. Then the trend continues. It's going to break the T2 with momentum. and this is where it's going to stop. You see how powerful the Fibonacci is?
Yeah.
It's going to break it's going to skip the T2 and it will break it with momentum. Don't believe my word. You're going to see it yourself. Then you have another pullback. It may come to T2 just to test this area. We don't need to worry about how deep the correction is going to be this time. Then it will smash it down again to the GM4A. When this happens, when we have a smash like this, we always change the way we measure the Fibonacci. We put it at the low to the low. And obviously, I'm going to show you many more examples. This is your first introduction today, so you may be confused. Don't worry about it. We will change the Fibonacci. Once we see a big, strong momentum breaking the T2 like this, we'll now change it because price is telling us there's a momentum. There's huge participation to the downside. That's basically what it means. Because we've skipped a target. It has broken down strongly below the T2. So it's telling us there are more sellers. The market is actually selling fast. So we change the way we use the Fibonacci. Instead of heights to low, we now measure from low to low. So we bring the Fibonacci from the low before the pullback of the T1 to the low after the smashing down the T2. We are now looking to target the T2 of the lows to low. See, if price should stop here, this is one of the best buy. This will be one of the best trade you can wait for. You may have this once in a week. Sometimes you may have it more than one, maybe twice, depending on how many currencies you look at. As I do, I don't look at many currencies. I find, you know, the major one I trade is the Canadian dollar, Japanese yen, but I can look at the pound, dollar, yen, or even the euro dollar, okay? I normally get one of these trades a week on the 5-minute chart. This will give you a very strong move if you can find this sequence. Therefore, utilizing the Fibonacci is one of the powerful tools or the powerful things you can do when it comes to trading the Wave of Success methodology. And this is your introduction to it. You will learn it, you will know it, and you will find it very useful. Okay. So let's check the Euro US dollar. Price is slowing down a little bit here. Okay. And I shared something on the trade that I was posting on, that I'm posting currently on the YouTube and the Trading View. Look at this. When you take a trade, you have to reinforce this all the time, Jordan. You have to reinforce this psychology. This is how you think. If you can think like this, you will be calm. You will put, your emotion will be in check. You've taken the trade, you've done your job, you've set your stop loss. Now you know how to set the target. You've set your target. The first one we're doing this morning is we are setting the target at the T1, okay? And you say to yourself, I've taken the trade. I've done my job. Well done, Jordan, because I've done what I need to do. I've identified a trend. I've identified the correction or the reversal. I've executed the trade because I'm expecting the price to go in the direction of the trend after the pullback. Now, I have to say to myself, with this trade, anything can still happen. This trade can be a winner. This trade can be a loser. That is not in my control because I have accepted the risk. I know how much I'm risking on this trade. I'm risking 6 pips. But if this trade is a winner, I'm going to be winning 21 pips. It's simple as that. Then the second thing is every moment is unique. Because the trade that I took yesterday was a loser, does not mean this is going to be a loser. Or the trade that I took earlier this morning, is a winner, does not mean this one is going to be a winner. All I have to do is to keep on taking those trades because I believe there's an edge in my methodology. That means I'm likely to win at the end of the sequence of trades. Sample sizes, that's why we do trades in sample sizes. We don't just rely on one or two trades. We take those sample sizes because there's an edge wrapped in them. I have probability in my favor. Then thirdly, this edge, this strategy that you're taking, which is one part of it, you're going to learn many more strategies. This is just an indication of a higher probability of one thing happening over another. The indication that if I take the second break with this strategy, price is likely to go down. It doesn't mean 100% it will go down. You've seen the example where it did not work. Then 4, there will be a random distribution between winning and losing trades. This is actually very important, and I'm going to explain it even better. Let's use the weather forecast as an example. You know, when you are leaving the house in the morning, you check your weather and they tell you it's going to rain at 10 o'clock. So you've taken your umbrella, you are wearing an appropriate clothing, preparing that the weather is going to rain. It's not all the time that the rain will happen.
Yeah.
Some days it may not rain. You may have the cloud, but the rain did not come. And some days, the way they have organized the weather forecast, everything will happen the same way. So on the days that the weather forecast did not give you the correct prediction, does that mean they will have to throw away the system?
No.
No, because they know they have an edge. They know that maybe 7 out of 10 prediction, it will happen, but they cannot forecast which one it will not happen. This is exactly what we are talking about here. That means you have to take those trades. You cannot choose which one to take, which one to not take, because you're feeling, oh, maybe the euro US dollar, the last time I take it, it did not work out the way I wanted it to work. Do you understand how powerful that is?
Yeah.
In order for you to gain the best, to gain the best power that is wrapped up in your methodology, every single trade, you must take them as long as it fits perfectly into your edge. You cannot pick and choose the trades. You may have 4 winning trades in a row. That means the weather forecast in 4 days in a row might be 100% precise. That means you have winning trades. The way you expected it to work, it works exactly the way you expected it to work. Then we come on Friday, it tells you it's going to rain at 10 o'clock in the morning. Guess what? The sun was shining at 10 o'clock in the morning. It does not mean the system is broken. This is a probabilistic environment.
Yeah, I get that.
That is why you set your stop loss. That is why you accepted the risk. That is why you calculate your risk. Let me share the, where is it again? Desktop. Chart247. Let's bring out the lot size calculation. This is why you use your calculator. You say to yourself, okay, I have 1,000 pounds. I'm risking, in this case, 6 pips. You calculated it. You know how much you're risking. you know you would if you lose in this trade, it will only cost you 2% of your equity, and you're happy with that, you took the trade. Everything is wrapped up in your approach to trading. Therefore, there's nothing to be afraid of. And finally, you say to yourself, I don't have to know what will happen. I've done my job. I'm not the one that controls the market. The banks, they will make me money if they are selling. They will make me money if they are buying. I just have to do what? I just have to align my methodology the way the market works. And that is why you are doing what you're doing. Does that sound good?
Yeah, I get exactly what you're saying. The weather one is a good, I don't know the word, but it's a good way of describing it.
I always use that example because, you know, when I was designing the course in 2000 and I can't even remember, I think it's 22 that I did the trading for a living course that we're using as a basis for this. That was the thing that came to me, you know. I believe is an Holy Spirit inspired it into me to use it as an example. And I always use it, and people always get it because it's very simple. You know, it's the mind. And let's talk about the mind now. The way our mind works is very funny. For no reason, you will start to be afraid. Am I doing the right thing? You start to second guess yourself. That is okay at the beginning. But what we are doing is, what I'm doing, the reason mentoring is very powerful is you have someone to lean on. I've made all the mistakes, so you don't have to make those mistakes. And I say to people, just you've paid me to teach you, then you have to, you trust me to give me your money, then you have to trust my words. If you can think, it may not be easy at the beginning, but if you have the perseverance to stick by it, and also what helps is what you're doing, because what you're doing is proving it to you bit by bit. The last video you sent me, the way you analyze the market, I was so impressed because I'm happy. I pat myself on the back. I said, well done, Shegun, because Jordan is getting it as well. That means the time we've put in, Thursday's evening, we spend time explaining it. Some days you don't understand. Some days you're thinking, oh, will I even get this? And some days you have the clarity. All those things add value because you are now at the point where you can actually say to yourself, yeah, I can take those trades. I know where my stop loss should be. I know how much I should be risking on this trade. And now we are adding the psychological part of it, the edge. And that is what I've just showed you is actually more important than the execution. Because if you don't know how to think properly, during the pullbacks within this trend, you will start to be fearful because money is involved. And you start to think, oh, is it going to go back and take my stop loss? Is it going to do this? You know, the mind will start to present you these different possibilities. But you have to stay calm. You have to stay positive. You have to think like a trader. That's why we name this the trader's mindset. If you can repeat this to yourself every single day, every single trade you take, then eventually you will believe this from the core of your being. And you would not have to bring out this again. You will just know this automatically. Then you will be able to accept the losing trades and you'll be able to enjoy the winning trades. Is that good?
Yeah.
So in the second part of what we're doing this morning, like I said, you will share your screen. I'm going to set up your Fibonacci, then we will go to the next part, which is the Morimat methodology. All we are doing this morning are new things to you, Jordan. So you're gonna have to watch this video. I'm gonna post it on YouTube. You have to watch it over and over again. And we'll in our coming session, maybe tomorrow, your session is tomorrow, Thursday, yeah. we're going to maybe re-emphasize it. But that does not stop you from taking your trades. You still need to complete your 20 samples of trades. Okay, so the time remaining, we've got 3 minutes before the end of this session. Let's look at other currencies. I didn't put the currency strength here, but we can look at Cardian again. That one, and this is a good one actually. The Cardian, where is it again? Where are we? There. We had so many trend changing patterns, but they keep breaking higher. This is where the concept I was sharing with you at the beginning of our course, that depending on how strong the trend is, you may have more than one, even more than two trend changing patterns. We had one here, we had one here, the one that we sold yesterday, and maybe this one. Yeah, this is another one. And still, they're still breaking higher.
I got a question.
Yes, go on.
You see where number 4 is?
Yeah.
So there's a lower high, and then it makes a lower low at number 4. And it makes a higher high. So that would be first break.
Yeah.
But then it didn't work.
No.
Would you buy the second break, or is it failed now?
This has failed now. And the reason you will not take this trade actually as a sell is because you have 3 here. The 3 green is here.
No, as a buy.
As a buy. Yes, you will take this one.
So you just kind of forget that lower high.
Yes, you will, because the thing is this lower high does not disturb the trend.
Yeah.
It's just there. It's like nothing is happening. This one, nothing is happening. You had a break. That adds to your reversal. You've already had your first break here. Even this lower high will be my entry. Let's hide the level. At the close here, I will take the trade.
Yeah.
You see, because it's a second break. That will be my entry. There. Okay, Jordan, let's take 15 minutes break. We connect back at 10 o'clock. Okay,
yeah.
20 minutes break, 10 o'clock.
Yeah.
Okay, nice one.